Hey Hugh, this is Ryan with TrendLizard.com, formerly Wavespeak.com, as you know. Hey, thanks for being a longtime subscriber. I really appreciate it. It means a lot to me, and I'm going to hopefully continue to provide you the same value that you've been getting from Wavespeak for so long. So, hey, I got those three tickers that you sent me. Thanks for clarifying what you wanted to see from those three. I'm going to start with the German composite DAX. It's actually the easiest of the three, if you ask me. And what we're going to do is we're just going to start with the very long-term outlook and kind of zoom in from there to see what we can figure out. So let us get started. Here is DAX with the data dating back to 1990, which is as far as they have it on stockcharts.com. So it looks fairly obvious that the inception, or not necessarily the inception, or when data began back in 1990, was in the middle of some larger pattern. And the reason I think that is because the pullback that happened in 2000 into 2003 retraced more than 61.8% of the move that we have from 1990 into 2000. So my thinking is there's a really nice five-wave advance here. I'll bet this was the fifth wave of a larger advance. So it's more or less a moot point, but it kind of gives us a little more context. So if this was a very large trendy move that ended in 2000 and then a larger corrective pullback, this basically becomes our starting point here in 2003. So everything after that is more or less what we care about, because this kind of cleans the slate for us and starts from there. So since then, it's really been a really nice move. I mean, in fact, everything on this chart, everything to the upside has been trendy. So that's a great thing, and there's nothing that suggests that that's going to end. The advance off the 2003 to the 2007 high, beautiful five-wave advance. This pullback actually kind of looks trendy itself, but it doesn't matter. It's already proven to be a counter-trend move, so that kind of got us set up from there for another big, nice, trendy up move to begin. So it appears as if we are currently in the fourth wave of this big, trendy five-wave move that began in 2009. Very similar to the U.S. markets. This is pretty much, and some of this stuff is different, but the one thing that's similar to the U.S. markets is off the 2009 low. It appears as if we're in a five-wave advance that has been in a fourth-wave pullback over the last several months. So that's what we're looking at from the very long-term time frame. Let's zoom in a little bit on kind of the mid-term time frame and see what we can see there. So this is the look a little bit closer at the advance off the 2009 low. Very nice five-wave move. You can see I got a bunch of labelings on here. It's eminently impulsive when you look at the internal workings of this move. Just beautiful stuff. And to go along with that, the pullback off the 2015 high is very clearly a counter-trend move. But therein lies the rub. You know from following me at Wavespeak, counter-trend, corrective moves, whatever you want to call them, aren't the best moves to trade. So it's kind of a little bit of a guessing game to say, hey, did this three-wave move end in early 2016, and is this the resumption of the uptrend? Maybe. It's certainly possible, but it's also possible that we're going to find it come up here, come back down here, chop around, and do its thing like counter-trend moves are known to do. So that's the risk of it all. It looks very bullish overall. There's no reason to think it's not going to continue overall. It can continue up overall, but the question comes back to, hey, is this fourth wave pullback over? So we're going to zoom in a little bit more and see what we can figure out there. So here is the counter trend pullback off the 2015 high. Three-wave moves, no doubt it's a counter trend move. But again, the question is it over? It sure looks like it could be. It's got a nice three-wave form. The advance off of February's low looks like it does have the potential to be the start of a trendy move, no doubt about it. But just as a fact, there's no way for us to determine for sure if the move is ended or not, if the pullback is ended or not. So the key levels that I would recommend watching going forward. A move above 10,400 is really bullish. That's the best chance of saying, hey, there's a good chance that the pullback ended without absolutely knowing it by the time it's actually broken out and moved to new highs. So that's an interesting level to the upside. To the downside, if this is the start of a new, if this pullback is going to continue, a move below 91.25 would be a bearish thing. That would say the pullback is not over. You got to expect the pullback to continue from here. That's the level we're watching to the downside. That's probably the most important level. So if you're trading it, I think at this point in time, you have to expect it to continue to go higher off the 2016 low. I think you have to be bullish here. There's just too many forces saying that things are going higher that I think you can do that and feel pretty good about it as long as it stays above 91.25. One thing you could do if you wanted to be a little more conservative is just wait for this advance to turn into a nice little impulsive move off of February's low. Look for a pullback and buy it at that point. And if you want to email me and follow up with DAX with me via email, we can certainly do that. But we are bullish. It's kind of hard to say for sure if the 2015 pullback into the 2016 low is over. I do think things will continue higher from here. 91.25 is the most obvious stop level at this point. And then it's just a matter of whether you want to be aggressive and get in right away or wait for a trendy 5-wave move to form first. So hopefully that's helpful, Hugh. This is number one. I will get to the next ticker momentarily. And thanks again for being a loyal subscriber, and we'll talk to you soon.